Gold is going up. It's over 10% up. And is it a solid trend or it will bounce back? What is your opinion?
Yeah, it's actually, gold's made further gains in recent days, and we're now up 18% year to date in dollar terms. And interestingly, we're also up nearly 18% in euro terms. And then we're up nearly 27% in sterling terms. So very strong gains, as you alluded to, so far this year. And you're exactly right. People are asking the question, gold's gone up by quite a lot in a short period of time.
Yes.
And yeah, will it continue, or will it bounce back and fall lower? What tends to be the case in most markets is you tend to get 2 steps forward and 1 step back. Nothing ever goes in a straight line.
Yes.
So I think most people are expecting a move lower and a correction at some stage. But the question is when, and many people have been calling for this move lower in the last 2 or 3 weeks, and yet the gold price has gone higher. So that speaks to the need of always sort of focusing on the medium and long term and trying to fade out the noise of the short term, because in the short term, as we know, absolutely anything can happen. You need to focus on gold in the medium and long term and as a diversification in a portfolio, because if you get into trying to predict the price move in the short term, you're engaging in speculation, which is a very dangerous game for most people, and people tend to lose money when they speculate like that in the short term.
What about physical gold? I hear that there are some very interesting developments in London market. It's gone up in price much higher in sterling denomination rather than in a dollar. What is going on in Britain, and what is happening with euro prices for physical gold?
Yeah, well, exactly right. Gold is going up in all currencies, and what's actually happening is it's not that gold is going up per se, it's that these currencies are losing value versus gold.
I see.
And that's what tends to happen. People tend to think about gold the wrong way around. Currencies lose value over time, and that's why people understand the value of diversifying and owning different assets. That's why we own stocks, we own bonds, we own property. And that's why we diversify. We don't leave all our money in a national currency, whatever national currency that is, because currencies lose value over time. That's what inflation is. It's not that the price of goods or services are going up. It's that the value of the money in our pocket is gradually eroded over time. So, and we see this clearly in the gold price. These currencies have lost a lot of value versus gold in a short period of time. So they are down, as we said, 18% in dollar terms, 18% in euro terms. And that means basically at the start of the year, gold was at $1,062 per ounce. Today, gold is at $1,257 per ounce. So that's quite a big move in a short period of time, about 18%. Sterling terms, we've gone from £974 to £1,147. Sorry, that's euro terms. 974 euros to 1,147. And I have these written down just in case you think I have an amazing memory. I wrote it down just for the interview. Sterling terms, we've gone from £716 to £888. So a very, very significant move in sterling terms. And again, that's because sterling has weakened quite significantly. And people are saying, well, why is that? And I suppose the reason for that
was my question. Yes, why is that? Is it to do with Brexit?
Yeah, partly. People are attributing it primarily to Brexit. I think that's one factor, but I think a bigger factor is concerns about the UK economy. The current account deficit in the UK was I think it's the second highest current account deficit in the post-war years since 1945 in the UK. So that means the value of their imports of goods and services were vastly higher than the value of their goods and services exports. And the interest that they earn on their overseas assets did not cover that deficit. So that's quite an important thing for an economy, and the UK has had a deficit for a long number of years, and it hasn't been an issue. But I think sterling looks very, very overvalued, particularly in the light of that very large current account deficit, and therefore I think sterling is going to fall, and then the Brexit creates a whole new set of risks. And obviously in recent days, people are beginning to, while I say a week or 2 weeks ago, most people were thinking that the UK would stay within the EU and that the inside, if you will, would win the referendum, and the UK would stay within the European Union. Whereas now, obviously, with Boris Johnson and some of the developments recently, it's looking quite, who knows, 50-50. It's going to be very, very close. That's all we know. And yeah, the consensus is that they will probably remain in. But as we know in a lot of elections recently, consensus can often be wrong on European issues because the people tend to have a mind of their own. There's a lot of discontent amongst the people today,
So can you say that up until Brits decide whether they're staying in the European Union or not, this market will see high volatility or it will stabilize way before the referendum?
Yeah, that's sort of short-term speculation. Very, very difficult to say. And so it's the hedge funds. These guys would speculate on that sort of stuff in the short term, and most of them lose a lot of money. And 1 in 100 makes a bit of money because it's very high risk speculation. So I don't know. I mean, instinctually, I would think that sterling remains vulnerable and will probably weaken towards the referendum in June. And we will probably see periods of recovery and slight strength, but I think the overall trend will probably be weaker.
So Brits will pay a lot more attention to gold, and in this situation, I guess they should, theoretically at least, right?
They should, yeah. I don't know if it's really on their radar in a big way. I think for a percentage of the population it is, but the Brits, like a lot of people, they are very fixated on property, particularly in London.
Yes.
So, but London property prices have begun to wobble a small bit at the top end, and I think if you start seeing falling property prices in London, then I think gold will be much higher on people's radar,
So British economy is heating up or slowing down before the referendum, but Chinese economy is showing a steady slowdown. So what people have been doing with gold in China, and has Chinese slowdown affected the price moves?
No, not really. I mean, the Chinese demand, there are ebbs and flows, and if you look at it on a day-to-day basis or a week-to-week basis, you can see it can go up and then go down. But on the whole, there are roughly 50 metric tons of gold that are being withdrawn from the Shanghai Gold Exchange every single week. And if you look at it over the year, there's roughly 2,500 metric tons every single year in recent years, So there are ebbs and flows. The question is, there is a sharp slowdown, and people felt that might lead to a slight decline in Chinese demand, particularly for jewellery, because they'd have less disposable income. But Chinese people are a bit like Indian people. They tend to buy gold as a savings vehicle. They don't really trust their paper currency.
Right.
Yeah, so it's actually, I think the demand statistics are suggesting that demand has remained very robust and may have increased somewhat, because obviously they have issues with their stock markets have fallen very sharply. The property markets have fallen as well, many of them, and then the currency has been devalued. So that is a perfect combination for gold prices to do very well. So yeah, Chinese demand, it's robust, it's quite strong, and we believe that trend is likely to continue.
Talking about Chinese neighborhood largest economy, India, an amazing thing is happening. It's more or less a strike. Jewelers went on strike. So do you think 1% duty tax raise will affect the market somehow, or it's a normal situation and nothing major will happen on the market?
Yeah, it's an amazing thing that jewelers go out on strike. I think people in Western markets find it very hard to understand that.
It's hard to believe, yes.
It is, yeah, but I suppose that speaks to why gold is just so popular, and so it's just such a huge part of the Indian culture,
Yes.
So Indians are actually, it's not a niche sort of thing that people buy as a luxury item. They use it as dowries for weddings. They use it for many different spiritual occasions, many different national holidays and festivals. So it's a huge part of their culture, and there are a huge amount of jewelers. I mean, in every little village, you might have a few jewelers, you know, whereas in Western countries...
I wonder, do they have a trade union of jewelers in India?
Yeah, they do, yeah.
Oh my God.
Yeah, that's exactly it. That's why they can go on strike, you know. Because in effect, gold is seen as a form of saving, you know. So it's very different than in the Western world. But yeah, you're right, that tax duty raise, it was somewhat of a surprise. And I think it probably will lead to a slight decline in Indian demand in the short term. But again, if you tend to, and there has been a lot of different taxes have been put on gold and different things that the Indian government has done. And people say, oh, look, that's going to affect the Indian demand. And it often does in the short term. But then if you look over an annual basis, the demand continues to be at around 1,000 metric tons every single year.